Oh, let's go. Let's go. And yep. Perfect.
Good evening, everybody. I think we've got a whole great group coming in here, Andy. It's looking fantastic.
Yeah, like there's a big group coming in already right off the bat. So welcome everybody. As you guys are coming in, please feel free to use the chat. Make sure that's working because that's going to be what we're going to for most of this. Let me know if you guys can see us, hear us, and you can see all the presentation. That would definitely help us out here. And we've got another
Just to let you
minute.
know, guys, we're gonna be monitoring that chat box all the way through this webinar. So feel free to use that to get your questions across, and we'll make sure we get those answered quickly and efficiently for you.
100%. Yeah, this is recorded. So if anybody has to leave for whatever reason and you miss a bit, don't worry. It's recorded. You'll get a link after this is done. The other option too is if you want to catch up on something, definitely book a call with us and we can answer more questions that way. But yeah, use the chat as much as you can. Ask away. Whether it's myself talking or Ryan talking, one of us will be answering questions. And at the very end of this, we're going to hang around for kind of a Q&A session after. So if you have any questions on anything we covered or anything in general, we're going to stick around and answer everything for you guys. So no worries there. So we're right at 7 o'clock now, which is awesome. There's a big group that's rolled in here. I'll give it just a little bit more to see if anybody else is coming in, but we do have a lot to cover in this. There is a lot to go on, so I'm going to be moving pretty fast with this. I'll be doing a lot of the talking, unfortunately for you guys, but Ryan's going to be here too. He's going to be helping us out, and he'll be watching the chat too. So ask all the questions you can. That's what the whole point of this is for. So, but yeah, again, thank you everybody for coming. This is going to be some great information for you guys. We're at 7. We'll give another little bit here, and we'll get going. There's almost 40 people here. That's insane. That is awesome numbers, you guys. But I think that's kind of, yeah, there'll be more people coming in and out here. So yeah, again, welcome everybody. This is a first-time home buyers webinar that Ryan and myself put on. We like to do this because obviously buying your first home is definitely a big decision in your life. So that's kind of what we're here for, is basically what we like to say is we're here to hold your hand the whole way through, whether it's the very first start of this process all the way through the rest of it. We're going to make sure you're taken care of and you know exactly what it is that you're getting into, and that it's going to be a fun and stress-free I guess progress or program. So don't worry, we got you guys covered. So we're going to get into this. There is a lot to go over. So first step is I want to say thank you everybody for coming. As I mentioned in the very first text that you guys got out when you signed up for this, that because you guys showed up for this, you are going to be getting a copy of my buyer's book that I developed here. You guys are going to get an e-copy of that in an email in the next day or two after this is done. You can read it on your phone, your laptops, e-readers, things like that. Also, you're going to get a condensed buyer guide that just kind of runs over what myself and Ryan do for you guys when it comes to buying a home. So again, thank you guys for taking the time out of your evening to join us today. So we're going to get kind of rolling here a little bit. As I mentioned a little bit earlier, buying your first home or buying a home in general is going to be potentially one of the most expensive purchases in your life. That's why we're here. If you guys are feeling any of these things, that's okay. It's common. I bought my first house. I remember what that was like. Ryan bought his first house at some point. Sure, he was the same way. So our goal by the end of this webinar is to alleviate all of those, if not all of those. If there's any missing, our plan is to definitely guide you through that to get rid of all of this. So yeah, definitely uncertain. That's okay. That's what we're here for. We're showing you exactly what you need to do in order to buy a home, and that we're here to make sure it's an easy process for you guys. So no worries there. We're here to answer all the questions for you. So but we're going to get into some introductions and we're going to get into this. So the people that you're talking to today is, first off, myself. I am Andy Goddard. I am a realtor here in Saskatoon, actually all over Saskatchewan, but I I kind of base my business around Saskatoon and the surrounding areas. I started out in 2021 with Royal LePage, since switched to EXP Realty at the start of January last year, just to kind of a bigger brokerage to help serve clients a lot better. So it's been a great turnaround for that. I've helped many satisfied buyers and sellers in the meantime, a lot of first-time home buyers. That's kind of what I really like to help with. I do live out here in Warman with my wife. My what's it going to be, 4 years old here in a few months, and a 2-year-old daughter, and our big dog Zeke. We've lived in Warman since 2016, but I've been born and raised in Saskatchewan, out in small town Maple Creek is where I call home. So that's me in a nutshell. I'm what's going to be taking care of all the real estate side of things. I'm going to put in here in the chat right now. There's two links. One is my Linktree account, which has all my social media accounts, whether it's my business ones or my personal ones, so you know exactly who I am, and you can check out my stuff there. There's also the booking link. So I'm going to be dropping this booking link in quite a bit. So if there's any point during the webinar you want something, answered one-on-one, or you're ready to start the whole process and get it going, definitely book a call with us and we'll get rolling right away. But that's me again, Andy Goddard. That's who I'm going to be helping out with the real estate side of things. So I'm going to pass it on off to Ryan. He's going to let you know who he is.
Good evening, everybody, and thank you so much, Andy. Just to let you know, guys, Andy has, we've been working together for quite some time. He is the best in the business. This guy is going to listen to you. He's going to get all your information, have that one-on-one support and help, and walk you through all the way through that buying process on the real estate side. My name is Ryan McEwen. I am the mortgage expert that works with our team. I've been with the mortgage industry for 20 years now, so a long time. I've been doing mortgages for most of my professional career. So all those little ins and outs and questions, fire away, ask those. We've covered a lot of information. We're going to cover a lot of information tonight, so don't be afraid to ask questions of me if you do have anything specific that you want to know. I've been with the Mortgage Group. That's my my mortgage firm that I am a broker under. I have been born and raised and lived in Saskatoon for most of my life, servicing Saskatoon and the surrounding areas, as Andy mentioned. But if you do have a property that is anywhere in that Saskatchewan market, please feel free to get us involved. We are fully licensed across the province. So, if it does happen to be something in Regina or, a small town outside of the city, we can handle all of that for you as well. So don't think that it only needs to be somewhere in Saskatoon for us to help you. We can help you all the way across the board there. I've been married for an absolutely wonderful 27 years to my wife, Michelle. I have 2 boys that are finished up university and still living at home. And I am a proud resident of Saskatoon, living in the Stonebridge area. I look forward to helping you all the way through your mortgage process and needs. And yeah, I'll pass it back to you, Andy. Let's get this thing started.
Awesome. Thanks, Ryan. So that's Ryan, everybody. I've worked with Ryan for quite a bit now. And honestly, of all the mortgage specialists I've had the opportunity to work with, Ryan's been the one that's been most knowledgeable and super helpful in the entire process. So honestly, with this whole thing, you guys are going to be in good hands. So again, here in the chat box, Ryan's website plus the booking link. Again, I'm just going to keep plugging that away for anybody who needs it. But there, let's get the introductions out of the way, and yeah, off we go. So what I'm going to do here, just to kind of get things rolling, is walk you through the entire steps of what it takes to buy a house. This is a very condensed version because honestly, there's so much that goes into this, but this gives you an idea of what's going to be happening. So like I say to everybody, whoever comes to me and says, I'm looking to buy my first house, what do I need to do? And I always mention, because it's the big purchase, to do your homework, learn everything it is you can about it. That's why we put this on, is to give you a lot of information. Yes, it's going to be a lot at once, but we can easily break this all down for you. So then I say, okay, perfect. I'm glad you want to buy your first home, stop renting, build some equity in your home. First thing you need is mortgage approval, because without mortgage approval, you simply can't buy a house unless it is you have cash for it. But then that's a whole different story. We don't need to worry about that part. But for most of us, it's we got to go through mortgage approval. So we're going to walk through that. I would send you over to Ryan. Ryan would take care of you, ask you a bunch of questions, get things figured out, see how your finances are, and then get you approved for a mortgage. Once he has that, good news, we come back to me, and now we know how much it is that you're approved for. We're going to sit down and figure what exactly is it that you need in a house? Do you need a detached house, a garage, a nice yard in the back, basement? Do you want more of a townhouse condo that gives you a detached home feel, but less maintenance? Or do you want a condo that's strictly maintenance free and you can go travel the world and not worry about your place when you're gone? It's whatever the fit is for you in your life. That's what we're going to figure out what it is you need. Once we kind of get that idea, we're going to start looking for the right home. So we jump on the MLS, see what's all out there and available. We start looking at a couple places that you like and want to see. And the first time we look at a house, it's always going to be, I wouldn't say overwhelming, but just a lot going on because you've never done it before. I'm going to walk you through things that you should look for when you're looking at a house. I'll also be looking on your behalf too, because I do know that when you first look at a house, it's a lot to take in. So I'll be looking on for things for you and pointing things out. Once we get into a groove of things, we'll find the right one that's for you. And then what we do is we negotiate on it. I go back to the other agent. We kind of come together on a price that everybody's happy with. And then we go in on that. Am I still with everybody? I don't know. It just kind of seems like I might have lost connection here. We still good, Ryan? Are you
Still
hearing me?
got you on my side, Andy. Still
Okay,
sounds good.
I just seen something pop up saying it's trying to reconnect, but we're okay here still. All right. So, anyways, we find a place, we negotiate, we're good. Once we have a signed offer, we go into what's called a condition period. I usually give about 2 weeks. That's lots of time. It's able to get us a home inspection, maybe the schedule inspection if we need that done. And it also gives Ryan time to finalize your financing, because now he knows the exact price that we're wanting to borrow. He can get to work on his end and get things going. And I'm going to explain a lot of this as we go. Once the conditions are happy, once home inspections and things like that are all good, then what we're going to do is we're going to lift conditions and it becomes a firm sale, and then we just wait for possession date. So during that time while we're waiting for possession date, you would sign with the lawyer, get all the transfer of the title over and things like that, and then get all that, make sure that's all solid, right? So depending on possession date, it depends on whether the house is vacant or owner occupied or there's a tenant in there. We can figure that out house by house basis. And then once that's all good, I'll meet you with the keys on possession date at your first home. And then that's when we're going to walk in, do another final walkthrough, we call it, make sure the house is still solid as we first seen it. If there's any issues, we can go back and make sure it's remedied, but it's just to make sure you guys are happy. And then once you guys are happy, I like to take a picture in front of the house, give you guys something to take home with you, right? So that's kind of the home buying thing in a nutshell. It's a lot more to it, but that's kind of the basics of it. And I don't cover the contract writing in this webinar. It's just because it's a lot to go over, but don't worry. When we get to that point, I either do it with you at your place and explain the whole contracts that we're signing, or I can jump on a Zoom and share my screen like this and show you exactly what it is that you're signing, so you know exactly what it is, what everything means, and what you're getting into. So there's, again, like I said, we like to pretty much hold hands as we do this, just to make sure everything is good and perfect and you know exactly what's going on. So if anybody has any questions on this part, simply just throw it out there. Again, there's a Q&A at the very end of this. Throw all the questions you can in here. Jordan, I do see that. Yeah, we definitely can after. We'll touch base. If you want, book a call with me, man. We can definitely talk more one-on-one. But yeah, we're going to answer all the questions we can in the chat as we go along. So yeah, so we're going to move on a little bit here. Again, here's the booking link. Let me just get that in the chat for you guys. So yeah, we're going to move on to what we start with is the financing, because that is always the first step, is mortgage approval, and that's the big thing. So the first thing we're going to move to is the first time home buyer incentive. So in the chat, if anybody or whoever wants to, let me know, has anybody ever heard of this that the government put on? Is to help people buy their first home. So it's okay if you haven't, because I'm going to go through it a lot, but I'm just curious if anybody's heard of this. All right, awesome. Yeah, so Ryan is going to be awesome for explaining if you need to use it. We always like to say if you don't need to use this and you can buy a home on your own without it, do it that way. But this is beneficial if you need to use it, and I'm going to run down why. And yeah, it is to do with down payment. Yeah, it's definitely a great program. There's two ways that this is going to help you out, and I'm going to explain both of them. This number is a bit dated. This is from 2019, but so far they've used at least $1.25 billion worth to help make homeownership more affordable for Canadians. So what this is, this incentive they give you is a shared equity mortgage. So basically it's an investment in the house that you buy. They're investing in both the upside and the downside of your property value. The money they give you is not interest bearing. There's no payments to make on it. You just have to pay it back in full. And there's no prepayment and penalty when you decide to do that. And I will explain more of that as we go. So what they're going to do is they're going to give you an additional 5% of a down payment to match yours. That's in order to buy a house and get approved for a mortgage, you have to have 5% minimum down payment. But these guys are going to help you out a little bit, and I'll explain why or how. Who can be qualified for this? So basically, as long as you're a Canadian citizen or a permanent resident. Now, here's where it gets a little bit iffy. I know I talked to Ryan a little bit about this, but as of January 1st this year, they have put that law into effect right now where foreigners cannot buy property in Canada. Now, permanent residents are obviously okay. Canadian citizens are okay. We have helped people before who have been here on work visas, but it's kind of a gray area right now. I can let Ryan touch on that in a little bit here to see if anything's kind of moved forward with that. But we're kind of working to see if people here on work visas are still going to qualify or not. But we'll get into that a little bit later. But as long as you're a permanent resident or Canadian citizen, you for sure can use this. At least one of you has to be a first-time home buyer. So if you're going in with a spouse, as long as one of you has never owned a home before, you can use this program. If you or your spouse are going into this together, whoever, as long as the combined income doesn't exceed $120,000 a year, you can qualify for it. If it exceeds $120,000 a year, they feel that you don't need their help. So that's kind of what to watch for. If you are using this program, you also have to watch that whatever home you're buying cannot exceed 4 times the amount of your qualified income. So for easy math, if you make $100,000 a year, you cannot buy a home worth more than $400,000. It just won't let you buy something over 4 times the amount you're qualified for. And the maximum down payment plus the incentive that they give you cannot exceed 19.9%. To put it basic, if you put anything from 20% and over for a down payment, you don't have to pay insurance premiums on that. Anything below 20%, you have to pay insurance premiums on. This program will not help you get over 20% to avoid paying premiums. So if you put 15% down, they're only going to give you 4.9%. That's just something to watch for, but I'll get more into that in a little bit here. There's one other thing you can use for a down payment, and this is also a first-time home buyer program, is using RRSP. So if you have RRSP saved up, you can withdraw up to $35,000 per person to use it for a down payment. They're not exclusive programs. You can use them both. They're both defined as a first-time home buyer. The only difference between this one and the incentive they give you is if you use these for your down payment, within the first 2 years of using it, you do have to start paying back into them. Now, this is where you can pay them in installments. You can just pay chunks at a time, right? It doesn't have to be all at once. But as long as it's within the first 2 years of using it, you start paying it back, you're good. If you have money in RSPs, they have to be in the account for 90 days untouched. That's kind of the rule for a lot of things. So just to be aware of that, but that is what we usually recommend too, if you are using this, is please reach out to your RSP provider and let them know what you're doing. Just make sure that's in a good way too, because we have had it, I think once before, where somebody said they were going to use it and turns out we had the deal going and the RSPs weren't actually able to use for this, and it kind of crashed the deal, unfortunately. But so just, if we're going to think of using it, please reach out to your provider first, just to make sure it's good to go. So back to the incentive. When do you pay it off, when this amount of money they give you? So there's 3 times you can pay this off. Either when you decide to sell your home, let's say you owned it for about 5-10 years, and you decide to sell it, you use the proceeds of the sale of the home to pay them their money back. You can pay it off anytime within the first 25 years of your mortgage term by either a lump sum that you've saved up, or you can refinance your mortgage to pay it off. And the third and final way is, let's say you paid off your mortgage all the way through, you can just use again as a lump sum of your own savings, or you can take out a small equity loan on because you've got nothing but equity built into your home now, it's paid off. So you can take out a small loan on that and pay them off that way. So an example of how this investment kind of works and what to watch out for, and a reason why you can't pay this off in installments. So just for easy math, let's use a $400,000 home. The minimum down payment of 5% is $20,000. So the government's going to give you 20 grand. and they're going to invest in your property. So when you go to pay this back, it's based off of the value of the home at the time that you pay it back. So if your property value rises to, let's say, 500,000, you would now have to pay them back 5% based on the 500,000, which is $25,000. Flip side is same thing. If your house value is at 300,000 now, then you would have to pay them back the 15,000 instead of the 20,000. So it's the amount that you pay them back is based on how much your value of your home is at the time you pay it off. That's why you can't pay it back in installments, because they need to know the value of your home. Things to watch out for too with that is if you do buy a home with, let's say, like a blank open basement and you decide to develop it, that will increase your property value quite a bit. So that will obviously raise your value, which means you're going to be paying them more back. But just things like that to think about. It's always based off of how much the value of your home is at the time of paying it back. So that's how the investment works. Now, an example of how this is beneficial, because I'm sure there's a lot of people like, well, how is this beneficial? I got to pay them more money back. So here's how it works. Again, 400,000, easy math. So the minimum down payment, like we said, is 20,000 for a $400,000 home. So you put the 20,000 down. Now you need to borrow 380,000 from the bank. With the incentive, they're going to add 20 grand to your down payment to make it 40 grand. You put all that down. Now you only have to borrow 360,000. So now instead of borrowing 380, you're borrowing 360, which means your monthly payments are smaller. And when I mentioned these insurance premiums, when you put the 5% down payment, the minimum down, the insurance premiums that are at the highest point, you put 10% down, they drop quite a bit. You put 15% down, they drop even more to 20% where they're gone. So you now have a 10% down payment with their additional 5%. That means the amount that you're borrowing from the bank is less and the insurance premiums are less, which means you're paying less a month for the mortgage. That's the one way this benefits you, is just to make it cheaper payments right off the bat to help you get going. The other side, which we have used quite a bit too, is that it kind of, in a sense, doubles your down payment. So if you qualify for a mortgage, but you only have, let's say, 10,000 saved up, that's the minimum amount for a $200,000 home, but you could be approved for more. It's just you only have 10,000 saved up. The government is going to give you that additional 5%, which jumps it up to your 10,000 to an additional 20,000 now. So now that 20,000 is good for a minimum of a $400,000 home. So just to recap, there's two ways this is going to help you. One, cheaper payments at the start, or it's going to bump you up to a higher price bracket if you just need a little bit more of a down payment saved up. That's where the benefit lies to this. So again, if we don't need to use this, we don't need to use this. But if you do, and it helps you get to a nicer, more expensive home just by giving a little bit of a boost, it has worked well for us. We have used this with quite a few clients now, and it's just worked to get them just a little bit more of a house, and it really works well. So if you guys are thinking of using this, definitely reach out to us, reach out to Ryan. He's going to be able to walk you through all that and let you know if that is a good idea and how it's going to help you. So again, I'm going to throw it in here. Book a call with us if you want to hear more with that, but that's how the incentive is going to work. So if anybody has any questions, I see there's lots coming in. Thanks, Ryan, for running that through. If anybody has any questions just on the incentive, let me know. And yeah, you will have to have your own money down, but this will help essentially give you more for a down payment, more of a house, things like that. So keep the questions coming. I'm going to move on to what it takes to get mortgage approval now, because this was one step to it if you need to use it. So a mistake that people make is obviously not getting a pre-approval. Honestly, when it comes to buying a house, like I said before, you can't buy a house without a mortgage approval. Without it, we just can't shop around, and I really don't feel comfortable kicking people out of their homes to look at a home that we simply cannot buy. It's just not really fair to them to kick them out of their homes just for somebody to look at. If we want to just look at houses, I would say let's go look at some open houses to get an idea. But this is why pre-approvals are so important. It also gives us the amount that you can be approved for, so we know exactly how much we can spend and what range we can look in. Because if we don't get a pre-approval yet, but we start looking at $500,000 homes, but then eventually find out that we can only be approved for, let's say, 350 or 400, there's a big change from 100,000, right? So a $500,000 house is quite a bit different than a $400,000 house. And I just don't want to get expectations high, and then all of a sudden we kind of have to go down a little bit, and it's kind of a little discouraging. So we're trying to avoid that altogether. And let's just figure out how much we can be approved for right off the bat. So there's three things that kind of builds a mortgage approval, and they're going to look at three things for sure: your credit, your income, and your down payment source. So first off with the credit, most lenders want to see somewhere from 620 to 650 as a good starting point for credit score. If it's anything less, if there's anything less than that, we can kind of work with that, but it depends on how bad. You might have to go into what's called a B mortgage, which might come with a bigger down payment. But let's just say with the normal range for now, 620 to 650 and up is perfect. They're also going to look at your credit history. How do you do with payments? Do you miss payments? Do you have creditors calling? Do you have a bankruptcy from before? Things like that. They're going to look to see how your spending habits were. Then they're going to also review your income. So if you have a salary position, that's perfect. We can get a letter from your employer that states how much you make in a month or a year or whatever, and work with that letter. If you don't make a salary position, like you work an hourly job, usually they want to see 2 years worth of tax returns to kind of see what you kind of make over the last couple of years. For people that are new to Canada, don't worry if you haven't been here for 2 years or even filed your first income tax for the year or anything. Don't worry, there is a new to Canada program. Ryan is going to touch on that here in a couple more slides. So don't worry if you don't have 2 years worth of statements. It's okay, we've got you covered. But that's kind of the general rule, what they're going to look for. And then they're going to review that. They're going to review between your debt and your income. They're going to see how much you make compared to what you owe. And then third and final is the down payment, which is usually the biggest one, right? They're going to look to see how much you have, where it comes from, things like that. So the amount of down payment definitely affects how much you can be approved for. If you make a killing and you do very well for yourself, you can be, let's say, approved for upwards to 500,000 or 600,000, but you only have, again, let's just go with 10,000 saved up. You're only going to be approved for how much your down payment is, in a sense, right? So that's what we're going to have to look at too. Again, that's where the incentive is going to come in and help. But there is about 3 to 4 ways to get a down payment. The first one, obviously, is your own savings. Number 2 is you can use your RRSPs, as we spoke to before. The third way is what we like to call a gift from the bank of mom and dad or an immediate family member. So if an immediate family member is willing to gift you the down payment, you can definitely do that. If you decide to pay them back later on, that's between you and them. The lenders cannot know that you're deciding to pay it back because they'll just assume that's more debt and that goes against you. So it has to be a gift and writing that it's a gift for you, but that is a third option. There is a fourth option, but it's more inclusive. So the Métis Society of Saskatchewan has a first-time home buyers grant. So if you are Métis and part of the Métis Society, they are giving upwards to about $15,000 for a down payment. So if you want any more information on that, please reach out to me. I do have some info on how to go about it, but it's the same way as using the incentive. You do have to qualify for mortgage approval on your own, but they will give you part of the down payment or 15,000 worth of a down payment. It would just kind of go hand in hand. So we would have to look into that together, but that is an option. So that's kind of the 3 things about mortgage approval. The other thing with the down payment too, because we have helped a lot of people from across seas that are new to Canada, whether it's from Nigeria or India or wherever you decide you're coming from. That's awesome. If you have money over there that you're going to bring over to Canada to use for a down payment, just got to watch that. If you are, that's perfect. It's fine. It has to be over here in Canada and it has to be sitting in a Canadian bank account for at least 90 days. So if you have, let's say, 40,000 sitting over there, and you're bringing it over in installments, every time you bring a chunk over, it kind of resets that counter. So what we recommend is if you're using money from wherever you're coming from for a down payment, bring it over to Canada right away as fast as you can. That way we can get that 90-day count started. So you're not being like, okay, I've got a job here. I'm doing really well. I want to buy a house, but now we got to wait another 90 days because your money is sitting here in an account waiting to get to its 90 days. So that's what we recommend doing as soon as you can. So that's just a couple things for mortgage approval. What do we got here? Okay, so it is underwritten. So once we get an offer on the table and accepted, and Ryan starts the approval process again, it has to be approved by underwriters. So they're going to review your income again, your credit, your down payment source, things like that. But the nice thing is they are reliable, right? And it's going to tell us exactly how much you can be qualified for. Again, like I said, we need to know that amount because I don't want to get high expectations of let's go look at $600,000-$700,000 homes without knowing how much you can be approved for. So this is why it's so important. And yeah, so that's kind of the basics of mortgage approval. I did mention this new to Canada program. So I am going to hand it back over to Ryan. He's got some great info on this for everybody that's new to Canada. This is how it's going to help you. So Ryan, I'm going to let you go ahead and take it away.
Thanks, Andy. Some great information so far, guys. And Andy's kind of touched on a couple of points. You know, number one, getting that pre-approval. One of the things that that I do on the pre-approval stage is I don't just say, okay, you make $80,000, you're pre-approved for, you know, to buy a $400,000 house. We're going to go through and we're going to have a great conversation, you and I. We're going to find out about your needs, your wants, your goals with this new home purchase. We're going to analyze the application. You know, what kind of income you have. Is this self-employed? Are you working on a salary? We're going to go through, you know, and talk a little bit about your credit history. We're going to talk about the down payment. As Andy mentioned, there's kind of three pillars that we talk about when getting a mortgage approval. That income piece, you know, can you afford the home that we're talking about? That down payment piece, are you ready to go with your 5%? And of course, the credit side, do you have any other payments that are going to impact that pre-approval? I analyze all that, you know, so we'll go through and know that, you know, when we get to our pre-approval, it is reliable. It's not just, you know, that online calculator that you see with some banks. This is going to be a pre-approval that has some bite to it and does have some reliability when we go back to Andy to buy that home. So let's kind of move on and talk a little bit about the New to Canada program. It's one that we do see a lot, you know, here with immigration in Canada at an all-time high. They were expected to bring in another probably 1 million new immigrants into Canada in 2023, and that number is growing in leaps and bounds. They are actually one of the hugest drivers of housing here in Canada. So we do have special programs that are designed to help our new to Canada, you know, people coming into Canada. So number one, immigrated to Canada within the last 5 years. We know that when you're coming here from other countries that you're typically obviously going to have a limited Canadian credit history. These programs are designed knowing that, you know, in the background. We can use Canadian bank statements, rental history, and utility payments as credit support. So if you've been here for over 12 months and have a 5% down payment, one of the requirements for credit is that we can look at things like 12 months of a rental payment history and 12 months of a utility payment as sufficient Canadian credit history. So you don't always have to have those large Canadian credit bureaus established. We can use things like rental history and utility payments to establish a track record of your Canadian credit history for 12 months. You know, even further to that, if you have a little bit more down payment, up to 10% down payment, we can actually use the first-time home buyer incentive to get you up to that 10% down payment. That cuts your time here in half. Typically at that point, all we need is 6 months worth of Canadian bank statements to establish a good Canadian track record of credit, and we can get you into a home sooner. So, you know, for newcomers coming in, typically that minimum time here is at least 6 months. And if you have that 10% down payment, even if you include that first-time home buyer incentive with it, we can get you into home as early as 6 months in the country. So, you know, for our new to Canada clients, let us know right away. As Andy mentioned, the big thing that we do see with our new to Canada clients, get that money. If you're transferring money from the country that you're coming from, get that done immediately. Get it done right away. Get it sitting in that Canadian bank account. Then we don't have to worry about it. We've got it sitting there for the 90 days. Our lender is perfectly okay with that. Okay, so big thing there, get your funds here and get that ready to use for down payment. Next one on the list, your permanent residency and work permits are allowed. Permanent residency, fine. They actually look at that, you know, almost as a normal Canadian citizen. Lots of our new to Canada clients on permanent residency status, no issues there. We can get them in. Like I mentioned, that 6-month window typically is where our permanent resident status can get into new housing. With, you know, some of you might have seen the changes made to the foreign buyers ban that has come in January 1st into Canada. This has affected our new to Canada clients coming in on work permits a little bit. what they are seeing here now is people that are coming in on a work permit, they can still buy. They do have to be here for at least 4 years and have to have filed Canadian income taxes for at least 3 of those years. So you can still buy. Normally what happens there is you've got a good Canadian track record on your credit established within that 3 years, so that's not an issue. But we do have to wait a little bit longer for those new Canada people coming in on work permits. Permanent residents, we can get them in right away, like I said, at that 6-month mark. But people on work permits, if you're coming in, you do have to wait a little bit longer. Typically, it's at that 4-year mark. As I had mentioned, down payments, even for our new to Canada clients, we can allow that 5% mark, right? So if you only have that 5%, which lots of our clients coming over into Canada do have, we have some great options for you. So if you only have that 5% down payment, you don't want to use the first time home buyer incentive, and you've been here for 12 months, we can use that rental history, we can use that utility bill, we can use any credit that you do have established to establish that Canadian Credit Bureau and Canadian credit history for you. If you do want to use that first-time homebuyer incentive, our new to Canada clients are also eligible to use that first-time homebuyer incentive. That will jump your down payment up to 10%, and we can get you into a home a little quicker, typically right at that 6-month mark. So minimum down payments in Canada are at 5%. If you want to use that incentive, it cuts your time in half and gets you buying a home quite a bit sooner. As Andy's talked about extensively so far as well, that first-time homebuyer incentive grant, it's a huge advantage to use, especially on that new to Canada program. We can absolutely include this for our new to Canada clients, and it really makes the difference on time and getting you into, if not a little bit more house because there's more down payment being offered, or, if you've already kind of set a budget for the house you'd like to buy, it puts a little bit more down payment in that, in the deal, lowering your mortgage amount and giving you a little bit of a smaller mortgage payment. So great new to Canada program, some great options for you there. We do see a ton of it. Hey, Andy, we see a lot of these new to Canada clients coming in from these webinars. Know that there's some great options for you. Even if you are fairly new to Canada, we can get you set up. We'll have a great conversation, get you set up for when you're ready at that 6-month window, and we'll get you into a home. Looking forward to helping you. Back to you, Andy.
Awesome. Thanks, Ryan, for that. Yeah, we've helped quite a few people that have come from other places to Canada, and yeah, there's so many good options for everyone. So there's no worries there. Again, thanks for that, Ryan. Keep the questions coming in the chat, guys. This is all good stuff to know. So next little thing is I have had this question before too. Co-signers is a thing as well. This is kind of more intricate. So again, if a co-signer is ever needed, again, we'd have to talk with Ryan about that. He'd be able to walk us through if that is really a route to go down. But just in case, I do like to mention that yes, a co-signer is an option if you need. Basically, it's got to be an immediate family member again that co-signs for you. They have to be a Canadian resident, again, like a permanent resident or lives in Canada, has an income. They basically have to qualify for a mortgage on their own as well in order to co-sign for you. And if you want to use a first-time incentive, you can also use that as well, as long as you and your co-signers, what am I saying there? Your income doesn't exceed that $120,000 a year. You can still use it, right? So there are risks, obviously, to using a co-signer. Mostly for the co-signer, they are taking on the risk that you are to make your payments. And if you don't make your payments, obviously they're going to come after the co-signer. So we want to know that if you need to use a co-signer, we get your co-signer in on the loop and that we explain to them all the risks and things like that. But it is an option. They are committed to being a co-signer for you and on the title to your home, as long as you can't qualify on your own. Once you can qualify, though, for your mortgage on your own, then we can go about getting them off the title, free and clear into yours. And then it would just cost a little bit of money to the lawyers to get them to transfer their names off the title, a couple $100 here, but that is an option as well. So again, if you need it, reach out and we'll talk to you more about co-signers. But that's kind of it for the mortgage approval side of things. Again, keep the questions coming. We're going to be here for a bit to answer these all, but we're going to move on a little bit here. The next one is using your bank. Now, this can be a touchy subject a little bit, but anyways, there's nothing wrong with using a bank. I have a bank I use personally. I use RBC myself just because it's conveniently here in Warman. But I have one for my checkings and savings and my debit card, credit cards, things like that. So there's nothing wrong with using a bank. They're there for what they need to be there for. When it comes to a big purchase, like for instance, buying a house and a mortgage, your best option is to go through somebody like Ryan. It's just saves you so much of a headache. I'll even give you a little rundown of why. This did happen to me later or earlier last year. It happened to me. Now it is a bit of a story, but just to show that what can be an issue here. So with banks, you know how it works. Bankers hours, right? Everybody hears that Monday to Friday, maybe on the weekend too. But I did have an issue with the bank when we were using them to purchase a home. Now, they did. My clients that I was selling their house for and then buying them a new one to upgrade because they are having a baby and they needed a bigger home. We ended up selling their house, getting an accepted offer and things like that. So we went on to look for a house, found one, and it was in a multiple offer situation because it was last year, I think in August or July or August when it was red hot market. We were fighting a lot of people just to try and get a house. And it was 7 o'clock at night because that's usually when real estate is as most active as in the evenings and weekends, pretty much the same time that banks aren't open. So basically what happened is we needed to find out from their mortgage person at the bank if we could get a bridge loan so they could take possession of their new house before the old house closed for sure. But because it was 7:30 at night, we weren't able to get a hold of them because we always just got the same answering message saying that, I'll get back to you in one business day because the office is closed. Well, that wasn't very helpful. But long story short on that part is that we got the offer accepted as long as we could talk to them in the morning and get it approved. All was good that way. I ended up sending all the documents over to their mortgage person at the bank, and they said, yeah, we'll get on this. So they started working on it, as Ryan would do too. Then about a day before we were supposed to lift conditions, I did get the email from them stating that, yeah, they're approved, you're good to go. And I never lift conditions on a home without the okay from the mortgage professional. So when we're working with Ryan, I do not lift conditions until I get that letter from Ryan saying that, yep, you are good to go. Lift those conditions on the financing side. We're solid that way. I just don't do it unless I get the okay. They gave me the okay, so I did it. Now the deposit you put down is now pretty much sitting there in the trust account. So now that conditions are lifted and it's a firm sale, deposits are now no longer safe. If anything happens and the deal falls through, the deposit now gets transferred to the sellers. Just to be aware of that. We'll get into that at some other point when we decide to do this. But anyways, it was about a week before possession date. I talked to the lawyer and they said they haven't heard anything from the mortgage side, which gave me some concern. Then I got an email from the mortgage people at the bank stating that we need all the information again, which now scared me because they shouldn't need all the information that they were given about a month or two ago. So now we're in kind of a panic mode. And then what ended up happening was they didn't file the paperwork correctly. And now that the interest rates rose so much, they kicked them out of their pre-approval amount. And so the home that they were qualified for, they are no longer qualified for. And now it's panic mode. We were in the office of the bank for probably 4 hours with them. And the only thing they said that they could do is basically, we can't do anything for you. We're sorry. We're not sorry. They didn't even admit that. They just said, we can't do anything for you. And we would like you to come up with $10,000 more for a down payment, which is really hard to do when you've already put your money into this house. So they were on the verge of losing the house they were purchasing, the house that they were selling because somebody else is going to move into it, and their deposit they're going to lose. So it was very, very stressful and a nightmare. What happened was we ended up getting a hold of a mortgage broker. Ryan was in Italy on his anniversary, so he was unavailable, which that would have been my first go-to, but can't fault him for going on a holiday. So I had a colleague recommend another mortgage broker in the meantime, and she was able to get it done and approved with the right amount for us in a very, very short amount of time. Ended up saving the deal and all was good. So long story short, a mortgage broker saved our butts from them using a bank. Now, I'm not saying every single bank and every single transaction with a bank is like that. I'm just going to show you why it's so much better to use a professional and to avoid this same situation because it was definitely a nightmare. So the difference between using a mortgage broker like Ryan and a bank is that Ryan can shop around for you. Just like we can look at a bunch of different homes, he can shop around at over 30 different lenders' products to find the best rate and the best deal for you. Whereas a bank, they're more restricted to their in-house product, and that's kind of it. Ryan would work the same hours as I do. So if you have questions at night and it's, you need that question now, or we're in an offer situation and we need an answer, I can easily call up Ryan, text Ryan. You can call or text Ryan. Chances are he's going to give you the answer as soon as he can. Not, hey, I'm out of the office until Monday at 9 p.m. or 9 a.m. in the morning. So, sorry about your luck. Ryan's going to be there for us. Whereas the banks, they work their normal bank hours. We all know that. Ryan is going to give you the best rate right off the bat. This is the best rate I can offer you. Here you go. Where the banks tend to post their bank posted rates, and you may need to negotiate a better rate. And people just don't like to negotiate. It's fine. That's just how it is, right? Ryan pretty much works for you, just like I work for you. We're here for you, the best interest of you. And you don't have to pay Ryan for a fee for his service, right? Whereas the bank, they're more of a personal broker, and they tend to work for the best interests of their employer, right? They do work for you, but they still need to make sure their employer is, getting their money and things like that. So Ryan has got your back 100% of the time. And again, like I said, you can call or text him anytime with any questions, whereas the bank is a lot harder to get a hold of, right? Again, I'm not bashing banks. Honestly, I'm not. My dad is a general manager of a credit union back in my small town, Maple Creek. He's fantastic. They are great at what they do. It's just mortgage brokers are just the way to go with this, right? It's so much more convenient, so much easier, and definitely less stress. And if you decide, I've been with my bank forever, they're going to give me a good rate, and they do, that's fine. But I always just say, take your rate that they give you and bring it to Ryan and just see if it's something he can beat and things like that. And chances are, more than likely, he will be able to either beat it or match it or something like that. So it's always good to get a second opinion anyways. So if your bank going to give you a rate, bring it to Ryan, right? But I always highly recommend for a mortgage, go to Ryan, get a mortgage through him. It'll just make this a stress-free situation. So that's, and then again, yes, there are bank penalties too. You got to worry about when you decide to sell your home. Now, whether you decide to sell your home 5 or 10 years down the road, that's fine. It's a first home. Most people don't live in their first home their entire life. Some do, but it's usually getting more and more rare because you grow out of it, or you want to change, or you get a new job, or you decide to move, or whatever the life situation happens, and you got to sell your home early instead of waiting 25 years. That's okay. There could be some bank penalties by paying out your mortgage earlier, but what Ryan can do is at least give you the idea of how much they're going to be to have little or no payout penalties. Can't guarantee none, but at least we'll give you that idea of what you're looking at. Also, there has been times, rare occasions, but with banks, they've been known to have 15,000, maybe 30,000 in bank penalties. Again, it's a rarity, but things to watch out for, where at least Ryan will be upfront with you and show you what you'd be looking at when you do decide to sell this home, that you're all the payments that you're going to need and any payout penalties are covered, and how much that is. So again, these are the reasons why using a mortgage broker versus a bank is so good. Is just way better to go with a mortgage broker. So any questions on using the bank? I know there's a lot with that, but that's just that's a couple things just to look for with that. Now, I know there's a lot of questions. I'm going to let Ryan keep going on from here. Again, I'm going to keep putting this in here. Book a call with us. Again, if you got any more specific questions, or you want to get rolling on mortgage approval, definitely reach out to us. We'll get you on the right track and get you rolling here. But that kind of takes care of all the finance side of things for this webinar. We're going to jump into more of the real estate side of things. A couple things to cover there. We are running a little over time here. I know it's 7:45, so I'm going to do my best to run through this really quick and then get on to the Q&A section, get you guys out of here. So first mistake is buying directly from a builder. Now, I'm not going to touch much on new builds because simply a lot of people that buy their first home, it's usually not a brand new home. So I don't touch a lot on this. It's not like it never happened. So I do got to mention a little bit. With buying from a builder, I find builders are a lot like bank kind of thing, where they want to sell you their product and their product alone. And they're not going to show you any other options. Whereas I, as a realtor, can show you all different new builds options, show you what's best fit for you guys, show you other resale homes that might be a better option, right? I can just give you all the options. Again, I work for you in the best interest of you, not the builder, right? So I can also let you know which builders are the good ones and not so good ones, things like that. especially if it's a right option to go with a new build. I know new houses are nice and great and things like that, but sometimes it is nicer to go for a newer built resale home that already has everything developed. The basement's developed, the landscaping's developed, the driveway is all paved. Whereas a new build, chances are you got to put the landscaping in, you got to build a fence, you got to do the basement, you got to do the garage, things like that, right? So we just want to make sure everything's a fit for you, and that's why it's so good to use me to go to a builder instead of directly to a builder, right? Contracts are always a huge thing when it comes to real estate. There's a lot of contracts, a lot of paperwork, and I want to make sure that the contracts you're writing to buy a home from a builder is solid. And also I can negotiate on your behalf as well. Most builders don't like to negotiate a lot on the price, just because if they say, let's say they have a street full of new builds coming up and the first one you decide to buy, but we're trying to negotiate like 10 grand off the purchase price. Well, if you knock 10 grand off that one, then the next person is going to come in and want more off of theirs. And it just becomes a domino effect for all the builds. So they try not to budge on the purchase price, but they do offer things such as appliance packages, upgrades, cheaper options on maybe a deal on finishing the basement or a deal on the garage packages, things like that, that I can negotiate in for you instead of the purchase price, right? Again, I work for you, make sure you're getting the best of everything. And I also have people that say, well, is it any cheaper to go straight to the builder from you? And the simple answer is no. It's the same price whether you go straight to them or bring me with you. But the thing you're leaving behind if you go straight to them is knowledge of other products and the backing of an agent to help back you up when it comes to the deal and things like that. Because there's a lot that goes into it. There's a lot of moving parts. You want somebody in your corner to help you out. Just so be aware of that. So again, I don't touch a whole lot on new builds, but just say if you want to go check them out, definitely go ahead and check them out, but definitely bring me with you just so you get some backup on that. So again, throw out any questions you have on that part, but I'm going to move to a really important one when it comes to buying a home. And now that's a home inspection. Does anybody know, top of your head, or even just throw a guess out there, how much a home inspection costs in the city? And I'm just talking a random 3-bedroom, 2-bathroom home. Just anybody got an idea how much it costs? Oh, I wish. Sorry, that's bad, but yeah, if they were 150, I wish, but no, unfortunately, they're not quite that low. A typical one, yeah, we're closer, but not quite so much. A typical one, there we go. $500 is pretty close to it. 150, if you find a home inspector that does it for 150, I would really be concerned on what he's looking at, honestly. But for a detached home in Saskatoon, it ranges from anywhere from, I know my guy does it for 425 plus GST, so it's like 460 for a home. Some are 500 a home, right? Things like that. But it's anywhere from the $400 to $500 for a home inspection on a normal detached home. Now, I know some people are like, well, that's quite a bit of money. But when you're paying $300,000, $400,000, $500,000 for a home, a small investment of $400 or $500 to know exactly what is going on with your home, it's pennies compared to what could go wrong without one. Obviously, if you get like a condo, an apartment style condo, then they're about, I think, 250 or 275, and then townhouses and things like that. I'm going to talk to somebody in Alberta and see what they are, but yeah, they're about that much here. They cover absolutely everything. These home inspectors, at least the ones that I recommend, they don't miss anything. They cover absolutely everything. They'll look at every appliance in your house. They'll look at every utility in your house. They'll check your plumbing, your electrical. They have infrared technology that sees through walls and can tell you if there's any water damage or missing insulation. They'll look in the attic to make sure the same kind of idea. They check roofs. They check as much as they can. Most of it is visually check, right? They can't start ripping open walls and things like that, but as visually as they can with some cameras, definitely can. They don't miss anything. It's crazy. I've been to a ton of home inspections and there's always something different every single time. And don't be discouraged when you get one done. They're always going to find something. And that's a good thing, because at least it gives you an idea what to watch for in your house. But they definitely will find something. Now, it's whether it's major or minor, majority of them are minor things. It's like when you buy a used car, right? It's, oh, just make sure you check your oil every little bit, or this is a bit of a part that may need replacing in the future, right? Things like that. It's no different than a house. They're going to say, oh, maybe, there's a thing over here in the electrical that you just want to keep an eye on, but if it's major, The nice thing about this is that we can take this in negotiations again. So I'll get to these questions right away, don't worry. But so with these inspections, it's a condition. And the thing with conditions in a contract is if the conditions are not satisfied, you walk away from the deal. So if we go to a home inspection and it's a disaster, they find like a ton of mold or like the foundation is crumbling and it's just going to cost ridiculous amounts to fix it, you can walk away and say, we're not even dealing with that. Honestly, I've never been to a home inspection yet where we've had to walk away from the house. It's always been just little minor things or a couple more concerning things that we end up negotiating on. So what I can do with a home inspection is go back to the negotiation board and say, look, there's a couple things here we want fixed before we move in because they are quite a concern. Can you fix those for us? And they'll either say, yes, we'll do it. No, we won't. Or we can go back and say, you know what, we don't want you to fix it. We want to deal with it ourselves. And we'll just knock some off the purchase price then, give you a bit of a break that way. So those are things that we can do here. Yes, I did see that when we do a home inspection, I personally meet with you at the house with the home inspector. So we do a full walkthrough. That way the home inspector will walk you through everything he finds. And then I can also be in the background there listening. So I know what I got to take to the seller. So yes, I definitely am there for you guys the whole way. Home inspections, everything. So they don't miss a thing. A couple examples of what I'm talking about, right? Like most of the time when we go back to the negotiating table with this stuff is like major concerns, right? So a couple major concerns I've dealt with, just so you know what we're dealing with. There was a house, the dryer was on, dryers are always on a double breaker, right? They're on two single ones with a pole in the middle. So if it pops a breaker, both breakers trip. Well, whoever wired it in only wired it in on two single breakers. So if something happens and one breaker tripped, the other one's still going, your dryer is now on half power, which is very dangerous and can start obviously a fire hazard. So we had them go back and say, can you get an electrician to come in and actually rectify that, make sure it's solid, provide proof that it's done professionally, and they did. So that was a safe thing. Another one was they noticed that in the attic, the exhaust fan from the upstairs bathroom, so that sucks all the steam from your shower and shoots it outside instead of getting water everywhere and mold and things like that. They looked in the attic and noticed that the pipe from the fan to the outside roof vent wasn't quite on enough, and it was letting steam kind of flow into the attic. So now we've got moisture in the attic, and also it wasn't insulated properly. That pipe wasn't insulated properly. So now you're getting frost buildup, moisture in your attic, not a good thing. So we had them get a professional go in there and insulate the pipe properly, connect it to the roof vent properly, provide photos that it's done, and all good. So that's the things that we can do. I'll use my own home as an example. When we did ours here, my house was 4 years old when we bought it in 2016, and they noticed that there was a small leak coming from my shower in our main upstairs bathroom, dripping down into the main floor bathroom. So it was kind of coming in a very minor leak, but it was obviously a leak. All we had to do to rectify it was literally just put more caulking around the shower and it fixed it. But if we never seen that there was a leak that we couldn't see with the naked eye, that damage would have been astronomical eventually when it wore itself through, all that water damage happened. So things like that, we can make sure we can get rectified. And there's a lot of things that we can either ask for them to fix it or knocks them off the purchase price, things like that, right? So that's why these things are so good. And plus it gives you a big book of what you need to watch out for in your home, just to make sure it's running smooth as it can be, because it's a big investment. You want to know everything about it. So that's the big thing why we don't skip home inspections. Now, again, it's not mandatory. It isn't built into the contract, but I honestly wouldn't even recommend buying a house without a home inspection. It just does not make any sense. It could cost you so much more money in the long run by not having it. So it, like I said, if I didn't notice that water leak, the damage that could have cost would have been insane amount. So always get a home inspection, and I'll be able to put you through to a good person that knows what he's doing. And my guy is really good. He's very knowledgeable. He's not all scary, like, oh, everything is broken and things like that. He explains a lot of things to you, how to fix things on your own, things like that. So he's really good. So keep these questions coming. I am going to get to the final one here because we are running out of time, and then I'll get to everybody's questions at the very end here. Don't worry about that. So the very last and final thing for now is for condos. So people that buy condos now, condos come in any shape and form. They can be apartment style condos, townhouses, even detached homes nowadays have condo corporations attached to it. So if it's part of a condo corporation, there is going to be condo fees, and also this condo review. It's called an estoppel, a Schedule C. These are mandatorily built into the contract. So if we decide to buy a condo, then yes, you get this no matter what. The only thing that isn't mandatory is getting a lawyer to review it. Again, this is like a home inspection. It's in the conditions. If you don't like what's in this document or it doesn't sound good, you can walk away. Also, I highly recommend, just like a home inspection, get a lawyer to look at it. Honestly, that's what they're paid for. I know what's in these things. I'm just not qualified to explain if they're good or bad. That's what the lawyers are for. You have to use a lawyer anyways to get things transferred over and pay him anyway. So might as well get him to do this at the same time. My guy that I use typically doesn't charge you to look at the estoppel as long as you're closing a deal with him. So that way it's not going to cost you anything extra. So always, I just say, once we get it, is it okay to send to the lawyer? I would just say yes, and we'll get him to look at it, right? So what's in these things that's so important is things like the reserve fund. That's the biggest one. The reserve fund is how much money the condo corporation has in order to fix things that break on the main condo building. So you are in charge of your own unit on the inside, but chances are the main common building part is what's part of the corporation's part to deal with, right? So if, let's just say, for example, there's a 20-unit condo building that has to fix a roof. The roof that needs to be fixed is worth $100,000. If they have no money in the reserve fund, they do what's called a cash call. Nobody likes these. It's where they come to all the unit owners and say, hey, we need $5,000 from you because we have no money to fix this $100,000 roof. So we all need you to pitch in $5,000 out of your own pocket to fix it because we didn't put any money into the reserve fund. That's terrible. Nobody wants a cash call at all. So we want to make sure there's enough money in the reserve fund to cover things that need to be fixed. And the lawyer is also going to look at how much condo fees are and how much is being allotted from the condo fees to the reserve fund and things like that. Make sure the insurances are up to date. Make sure things are good that way. It'll also tell us what's been fixed in the condos, what needs to be fixed. It has a whole bunch of stuff that shows you about the condo. And the other thing is it shows you the bylaws. So what you can and can't do with your unit, right? So you don't see a whole lot of it with townhouses. Basically, it's almost like free range with those things. You can kind of do what you want. It's just the exterior. If you wanted to change like an exterior door, you have to keep it a certain thing, a certain style, just to keep the continuity with all the other condos. But the inside, you're more than likely able to do what you want. Now, when you come to apartment style condos, those get a little bit more tricky. We had some where my client didn't want carpet at all. He wanted to rip out the carpet and put nice laminate down, which a lot of people do. But the bylaws stated that you are not allowed to do that in the main living areas because it takes away that noise cushion for the people underneath. And so they said in the bylaws that if you're to replace flooring in the main living areas of your unit, it can only be carpet. So the EC found that out instead of getting into a big reno and ripping all the flooring out and paying for the new flooring, just to find out he can't do that, gets a fine from the corporation because he's in violation of a bylaw. So now he's got to rip all that new flooring he just spent money on out and put carpet in, right? So we want to avoid that. We also looked at a condo that the balcony was in really rough shape, so the flooring looked like it was going to rot away, and the metal railing was starting to rust away. But we looked, and in the estoppel package, it did say that they knew that these were in rough shape, and we're going to start fixing them, starting with the worst ones all the way till they're all replaced. And we have enough money in the reserve fund to do that. So that's some things to watch out for. So it's going to save you a lot of money as well in case you start doing rentals that you can't do, but also it's going to tell you everything about it, and they see that the condo is being run properly and they have the right amount of funds and things like that. So again, not mandatory to get sent to a lawyer, but definitely get it sent to a lawyer. He'll let you know if there's anything to watch out for, and it's free to you. This doesn't cost you anything. It's just needed to be looked at by a lawyer. So if there's any questions on the condo stuff, let me know. But other than that, that kind of wraps up the main information here. We are right at 8:02, so I ran 2 minutes a little over. That's okay. We're going to stick around here. There's still lots of us on here. Ask all the questions you want. We're going to stick around and we'll answer all of them. I know there's been some coming up, and I thank Ryan again tremendously for running through that with me. And yeah. So hopefully we've eliminated a lot of those things. Again, if not, if there's still something that's kind of nagging at you, here you go. throw that in there, book a call with us, let us talk to you more about it, let us fix those for you. I can walk you through a lot more stuff that that we didn't cover in here, because frankly we could go on all night with all this stuff, so we kind of had to condense it a lot. But townhouse style condo in the Wildwood area, yeah, I see that. It all depends, I'd have to look, but usually you're around, I think, in the Wildwood area. Yeah, sorry, the link to book is right here. Again, I'll keep throwing it out here. That's the link to book a call with me right here. No, it's not a link to my book. No, this is a link to book a call with us so we can talk one-on-one. It's just, this is what it looks like to you. This will be what it is here. It'll come up to a calendar, so it has all the dates that were available. You just pick a time and it'll come into my calendar. So that's what that booking link is for, to get to a book a one-on-one call with us. But back to that average townhouse in Wildwood, I believe is probably around mid twos. I'd have to double check though on that. I've looked at a whole bunch of townhouses and condos lately, so I'll double check on that one. But yeah, anyways, that's kind of it. Sorry, I'm rambling on a lot, but yeah, Ryan, feel free if you want to add anything now too. But I know I'll have to go back here and see what kind of questions we got that we gotta that I gotta go back to.
You bet, Andy. We've got a couple that I think maybe you should touch on. One question from Deep: should we do a home inspection on new builds?
Yeah. That is a good question. I've asked that quite a bit, actually, just kind of, with other different agents that did it lots, and some say yes, some say no. Most say no, just because you are going to get that home warranty. And so about the first year you get home warranty. So if anything is wrong, they're going to fix it within the first year because it's warranty. What they also do too is kind of like a home inspection slash walkthrough. So about a day or two or whatever it is before your possession date of the new build, you meet with the builder personally at the home, and we do a thorough walkthrough with like a big checklist they have. So if you go through and you see something that doesn't look right, or something looks off, or hey, there's a broken tile over here, or this doesn't look right, they mark it down, they fix it before you move in, kind of thing, or have it ready to go before you move in, things like that. So you don't really need to pay for a home. You can if you want. That is entirely optional to you. But with new builds, they tend to you have that home warranty that if anything was wrong in the first year, they're going to take a look at, and things like that. So it's kind of more of a preference, but you don't need to as much as I would say with a new build or with a resale home, sorry, because the resale homes have been used for years. It's good to know about that, but new builds is less issues like that. What else do we got? After
Perfect. I think I think there was a little bit of a follow-up question there too. What's after the seller? This is from Samuel. After the seller fixed the damages found by an inspection, who will come to confirm that it is well fixed, and who will pay?
Awesome
Great question.
Awesome question. So that's, again, like I mentioned, it's kind of more to the negotiation side of things. So when we ask them to fix something found by the inspection, definitely I get the sellers to pay for it, and they fix it prior to us moving in. I also, if we decide to go that route, I always make sure to write in what's called an amendment. So we sign an amendment stating this is what we want fixed, and we want proof that it's been fixed professionally. So they hire a professional that provides us with receipts that it's been fixed, and most of the time photos that it's been fixed. That way, when we move in, and let's say there's something came up that's an issue with what we asked them to fix, we know what professional company fixed it, and we could kind of contact them and be like, hey, you fixed this, but it's not quite right, or something like that, right? We have something to go off of. But I always ask for proof that a professional has fixed it up to code and things like that, right? So the other side is, if they decide they don't want to fix it, and we just knocks them off the purchase price, just to give you a little bit more leniency. That way you're going to have to pay for somebody to fix it, but at least you can pick who fixes it, and they'll do it, and you're kind of in charge of that, right? So it can kind of go both ways. But yes, if we ask them to fix something, we make sure to get it from a professional. So hopefully that answers that one, and they will pay for that if we can get them to, right? So what else do we have? So more about a townhouse. So yeah, townhouses are basically They can be half duplexes or row townhouses, right? Usually they can be main level with a basement, or they're a 2-story with a basement, right? Those are a townhouse. Um, those are good options if, you know, they tend to be cheaper than a detached home, right? There's, you know, they're cheaper in that option, but you got to watch, there are condo fees on that. However, the nice thing with a townhouse is you kind of get the best of both worlds. You get almost the size of a detached home. You get a basement, upstairs, main level, some very nice ones out there, but you get less maintenance to worry about than you would as a detached home, right? Most places take care of the snow removal and the lawn care and things like that. Sometimes water is included, so you don't have to worry about watering lawns and paying the water bill for that. Depending on each condo is different, depends on the corporation, but some say that you don't have to worry about exterior maintenance, so they take care of the roof and things like that that you don't have to worry about, right? So that's kind of what's nice about townhouses, is that they kind of give you that feel of both worlds, right? You don't have to do as much maintenance, but you also get a big home feel. The only thing is you are connected to somebody. So if you get an end unit, you only have somebody on the one side of you. If you find a row townhouse and you're in the middle, then you potentially have, you know, 2 people beside you, and then you got to think of, you know, how's the noise going to be. But most people that I've sold townhouses and duplex to say they honestly can't hear anything, so it's pretty good that way. And you can find a lot of nice townhomes in the 250 range, right? A little bit under, a little bit over. There's some really nice ones out there. So if you really want to look at some, I can definitely show you a list of what's around. Just reach out to me again and let me know, and I can show you kind of some options out there. We'll see if we can get you pre-approved and things like that. So I'm going to throw it out there again like that. But yeah, hopefully that answers. Let's see. What else am I missing here? Let's see.
I think we've got most of them covered here. Yeah. Where can we download your book? Yeah. Do you find the prices of homes haven't really dropped in price, even with the interest rates going up? That's kind of where we are right now on the questions.
Okay, so then that's, yeah, like they're slowly coming down. Not, you don't see it nearly as much as like places like Toronto, Vancouver, things like that, where they're taking drastic hits. Here, Saskatchewan is still the cheapest place to live in all of Canada so far. And our rates and our prices really didn't fluctuate nearly at all like Toronto, Vancouver, places like that, where you've seen massive increases and massive drops. We've stayed fairly steady. We are seeing a little bit of price drops just because, yes, interest rates have come up, which in that point pushed buyers out. Less people are trying to buy compared to when interest rates were like at 2%, right? So you're going to see a little bit of a fluctuation, but right now, because there's still low inventory, I got to look what I think I just looked today, but what were we at? 100 and just within this last week, there was 114, I think, new properties that came on the market, compared to, I think this time roughly last year, we were like in the 2s or 3s, I want to say. So we are still at low inventory of price or of units. So that means prices are still fairly steady, but you're definitely not seeing those multiple offer situations. There is some, but not nearly like it was. It's easier and more relaxed to find a house now. So yeah, prices are fairly steady, still a little bit decreased, but not so much. But yeah, I'm trying to find out where we're at here. There's that.
Fairly close to the bottom, Andy. Yeah, and honestly, as Andy mentioned, guys, our pricing here, some of the most affordable in the country. We didn't see a lot of the increases in pricing during COVID that the Toronto and Vancouver markets did see. So we're not seeing those big corrections on the other side here now that COVID has kind of let up and we've kind of gone into a bit of a recession. We haven't seen those big price drops here as well in Saskatchewan. So prices are holding very steady. We do get asked a lot, do you expect prices to fall quite a bit? And the answer is no. They've actually stabilized out, and we're expecting that prices are going to start to increase again, kind of more on par with what we've normally seen in the past. So kind of that 2 to 3% year over year is a pretty standard mark. The prices are going up. So if you're looking for prices to bottom out and you're going to lose 40 grand off a purchase price before you buy, don't wait. Those prices are not going to drop. What I would really argue against as well there is, if you are paying rent, the money that you pay rent into rent is 100% going to your landlord. You're not putting in any equity into your own pocket. You know, we want to make sure that we get you into a home, we get you starting to build your own equity in your own house, and that money stays in your own pocket, right? Don't wait for that price to drop, because it's not going to. Get into that home, start to build your own equity going forward.
Yeah, excellent. Yeah, absolutely. That's the main thing, is put money to yourself is always huge. I see this was a more of a direct message on my end, but yeah, do we suggest a custom home? If you can afford a custom home and you've got the money for it, that's again entirely up to you. I would love a custom home myself, but again, when you get into custom work, tends to be quite expensive going that route, because it's custom, right? So again, if you have the funds for it and that's something that you want to be able to design your own home, 100% you could go that route, right? That's definitely a personal preference. I would love one. Honestly, I think that's the main goal for a lot of homeowners, to be able to build your own home and design it the way you want. But for first time buyers, I honestly haven't ran into one yet that can, so that'd be quite interesting and good for them. I'd love to help them out with that too if they could. But yeah. Where can we download your book? Well, you guys are going to get an email with a copy of my book with a download link in the next couple days here. It's going to take me a bit to get everybody's stuff put in, but either give me tomorrow or at latest by the weekend, you guys are going to get an email with the link to the book, or booking link again, link to the replay for this, so you guys can rewatch it if needed, and also link to the book. So that's going to be coming to you guys in the next couple days here. That's covered. Townhouse versus independent house. I kind of touched on that, where it's all depends on preference, right? So a detached home, lots of people like because they got the freedom to do whatever they want in it. Whereas some people like townhouses because they don't want to take care of as much maintenance, and somebody else takes care of the snow removal and things like that for them. Some people like apartment style condos because they're snowbirds, they love to travel or whatever, and they don't want to have to deal with anything. They can just simply lock their door and walk away and know that their condo is going to be in at least taken care of at some point when you're gone. So it, again, personal preference. Townhouses are still a great option if your pre-approval just isn't quite to get you the a detached house that you want. They are still some fantastic, nice options out there. So we can walk you through that as well, going through that. There is no, I can't say one's better than the other, because one person could say that townhouses are better than a detached home, and the next person will say that a detached home is better than a townhouse. It's straight whatever's preference for you and what you would like. Migrated to Canada. We migrated 6 months back to Canada. Seems like apart from cash, we don't have any other way to buy a home. We have to wait at least a year, right? Let Ryan touch on that one if he has. Oh wait, you might have already. Hang on.
Yeah, I did cover that
Okay.
one already, you bet.
Okay. Decided to buy a condo. Is there a certain floor that's best to buy? Like again, that's no, condo fees usually don't change between like levels of floors, depending. I shouldn't say no, because some do, yes. Because you'll get to some skyrise like in the central business district, where like the top floors are your penthouse suites, obviously a lot larger, so they're going to have bigger fees. But like if it's the same units on floors 1, 2, 3, 4, 5, and are all the exact same across the board, condo fees are going to be the same. The only difference is if you have a 1 bedroom or a 2 bedroom, because usually the 1 bedrooms are like 500 square feet, 2 bedrooms are like 800 square feet. So you're going to get a difference in condo fees there. But other than that, depending on what floor you buy, no. Prices do reflect floors in a bit, because the higher floor you go, the more expensive they do tend to get, because more people like to be higher up than they do to be on the ground floor. Some people don't like to be on the ground floor because you're literally on the ground, right? Or sometimes they're built underground where your window is almost at face level. So it is a little bit more expensive to buy in more floors up, but you get a better view that way, right? So condo fees will still stay the same. They do go up. I mean, condo fees do increase every now and then, but as for all around, it just depends on square footage, but chances are they still stay the same. We got that around here. A friend was given a kind of advice not to buy a house in the meantime due to high interest rates. And that's where a lot of the issues is I think the media plays a terrible part in this, and social media plays a terrible part in this, where everybody's like, oh, the crazy interest rates are really high and you shouldn't drop. Honestly, and I know Ryan can back me up on this one too. Those 2% interest rates we've seen at COVID times is rare. We called that the lottery interest rates. If you got in on that, awesome, but that's not normal. This 4 or 5% range is what's normal. Historically average, this is where we're at, right? This is pretty much as standard as you're going to get. So when people say these are high interest rates, they're really not. They're about as average, right? We're in the low single digits. It's still a fantastic time to buy because it's going to be around this way for quite a while, I'd say. And again, Ryan can back me up on the interest rate side of things.
Yeah, I'll kind of touch on that a little bit. I mean, we do hear this a lot, and rates are, when you talk about high versus low, it's really relativity. Rates pre-COVID were kind of right in that 3 and 4%, right? And that's typically normal. Normally, we see kind of that 5-year fixed rate right in the 3.5 to 4.5 range. So they're slightly higher than that, but they are starting to normalize. So we actually have fixed rates now that are under 5% and coming down. So rates are starting to normalize and come down. As Andy mentioned, stuff during COVID, the government really wanted to make sure that the economy didn't collapse. They brought rates way down to 2% or under. And we call that winning the lottery. We've never seen rates that low in the history of mortgages before. We'll likely never see them again. Rates at 3.5 to 4.5%, very normal. So if you're waiting for rates to come down, they're starting to eat their way down. A better way of looking at that, I think that was Sahid that asked that question. A better way to look at it is if you're continuing to pay rent to your landlord, rent is 100%, right? So you're continuously giving 100% of your rental payment to your landlord for him to build equity. That doesn't help your situation at all. You're basically just giving that equity position and that money to your landlord. I would rather see you build your equity. So you put your $2,000 or $2,500 payment. You figure that's about $20,000 to $25,000 a year that you would put into your own pocket. If you're talking about rates being slightly lower, I would rather see you start to build your own equity. It's much more beneficial than worrying about 0.1 or 0.2 in a rate. Get you into that home, start to build your equity in your home. Much more beneficial.
Awesome. Yeah, that's awesome advice. Had another direct message here. Which area is the best to choose, Saskatoon or Martinsville or Warman? Those are fun ones. Again, preference. I myself love being in Warman. I think Warman is a fantastic community. Now you're going to get Warman and Martinsville people who kind of, I'm not going to say hate each other, but it's always like, oh, you Warman, we live in Martinsville. And then people are like, you Martinsville, we live in Warman. Both small towns are fantastic because they have so many amenities and close to Saskatoon. Then you're in Saskatoon itself, like Ryan's in Stonebridge. Stonebridge is a phenomenal community. There's so many areas in Saskatoon that's super nice and awesome. And again, just preference, right? Your purchase prices are roughly the same. I know Martinsville is slightly a bit cheaper than Warman, but if you don't like the big city feeling, you like a small town feel with everything you need, but the city's right there, Martinsville and Warman is a great option. For me to go from Warman to the edge of Saskatoon takes me probably 15 minutes. And then you're right at the north end where Costco is and everything like that. And I've known, because I drive in the city pretty much daily, all over the place, houses to houses, right? Some days when it's rush hour and I'm trying to get from Stonebridge to the north end, it takes me longer to get through the city, it feels, than from the city to my house, right? So they're both good areas. All comes down to preference. Both towns are beautiful. Saskatoon is also a great place. There's lots of great areas there. Again, preference on, if you don't have a preference of where, then we can look at all options. That's the nice thing about that. Benefits of paying the fees in a townhouse. That's a good question too. So condo fees tend to cover what's the common area maintenance, which it maintains the entire common area, the reserve fund. You got insurances, or like common insurance is covered. So you will still need to provide insurance for your unit, but there's insurance that covers the whole condo buildings. What else does it cover? Some cover water, some cover like the garbage and the sewer and things like that. Some even depends on the heat. If they're like a radiant heat, you don't have to pay for heat because it's covered in their boiler system. Some don't pay for heat, some pay for power, some don't pay for power, lots of them. But the main things that are covered is usually reserve fund, maintenance fee, maintenance fund, insurance, and usually garbage and snow removal and things like that, right? But then it comes down to each individual condo, what else they cover. The benefits for paying for that is you don't have to pay for snow removal. You don't have to pay to shovel, or you don't have to shovel your sidewalk or anything like that, or your driveway. You don't have to worry about lawn maintenance. And if the fees cover water, you don't have to worry about watering your lawn and paying high water fees in the middle of summer because you got to water the lawn all the time. So again, that's all preference. If you don't want to deal with that kind of stuff, then a townhouse would be the way to go because you don't have to worry about it. Same thing, if you decide to fly away somewhere and travel, you don't have to worry about somebody coming over to mow your lawn or to shovel your snow for you. So again, it comes to preferences, but the fees do cover quite a bit. See, Samuel's got one. Who's supposed to pay the real estate, buyer or seller, and what's the cost? So again, we get that question a lot. So we're going to cover, the payment side of things, right? So everyone wants to know kind of how the payment works. So how this works with real estate fees. You don't pay a real estate agent like myself, a realtor, to buy you a home. Okay. So when you go to sell your home, that's where we charge our commission, right? To sell your home, we'll charge a commission. So I know Saskatoon area, it's kind of usually the average is 3, 2, and 1, right? Or 6, 2, and 4. 6, 4, 2. 6% on the first 100K, 4% on the second 100,000, and then 2% on the remaining. Then what we do with that commission is we split that down the middle. And so if I'm selling the house, I get half, and then if a buyer agent comes and buys a place, they get the other half. So we split it down the middle. That way it helps bring in more buyers because it shows that we're going to split this with you 50-50 just by bringing somebody in. So that's kind of how we get paid. So let's just say the commission for a house is, let's just say 15,000 to sell the house. We split that in half. What's that? 7,500 bucks each. And then out of that comes my fee to my brokers to be a part of it, my advertising costs, fuel, insurances, taxes, and things like that. So I know a lot of people get that conception that we make a lot of money, which you can in real estate. Trust me, you can. But it's not like we're taking 15 grand from you and walking away with $15,000. It's split in half, split to other agents, and then there's costs out of that and insurances and taxes and things like that. So that's how we get paid, is through the commission to the sale of the home. So when we're driving you around and things like that and showing you different houses, we technically don't get paid to do that until we actually close on a home. I know there was a question earlier. I don't know if Ryan covered it or not, but same idea with him. You don't pay Ryan to do this for you, but there are fees attached to the back end. So we like to say, between your down payment, you also want to have money for the home inspection, money for the lawyers, and also about 2% of the purchase price for closing costs. So that takes care of the mortgage processing fees and things like that, right? So you always want to have a good buffer to have in case of those types of things, and in case anything comes up after the fact, right? So just to be aware of those things like that. So when you buy a home, you aren't paying real estate, you aren't paying a fee for me to buy you a house. It usually comes from the seller side of things. Just so you're aware of that. That's kind of how that all works. Are interest rates going to drop again? I know Ryan and I were talking about this just before we came on. I might let Ryan take over that to see what rates are going to do, because that's kind of more Ryan's thing.
You bet. So we're talking about a couple of different things, and I did answer that question directly on the response. But just for those of you that are still on the call here, usually when mortgages, we talk about a couple of different rate positions. There's what's called our fixed rate position or a variable rate position. Fixed rate would be a mortgage rate, and that is a mortgage payment that is held steady for the duration of the term you choose. Most of them are in that 3 to 5 year range. So it would mean that your rate would stay steady and locked in for that 3 or 5 year term. With a variable, it would mean that it's linked to what's called the prime rate, which is linked to the Bank of Canada rate. That is dependent on the economy. So as the economy and inflation goes up and down, that rate would fluctuate with the economy. Right now, that variable rate is actually higher than the fixed rate. Normally, they are lower. So we're seeing a lot of volatility in that, in that variable rate. But as I explained, the fixed rate has actually started to normalize quite a lot. The fixed rate is actually linked more to the bond rate, more to bond yields, and it has actually been dropping steadily for the last couple of months. And we're seeing some great sub 5% rates in both the 3 and the 5-year fixed rate position. So that's kind of what we've been recommending, is that is really looking at that fixed rate position. Rates are quite a bit better, and they take that volatility out of the rate position, and they do hold that rate steady for the 3 or the 5 years that you do choose. Great question.
Awesome. And then another one I had to me was, what interest rate to need to have, either fixed or variable, fixed rate or variable rate. Same idea right there, right? It all depends on different. Again, I'll let Ryan. That one was kind of a direct one at me, Ryan. That's probably why you didn't see it, but I'll let you cover that too if you haven't already. Sorry,
Yeah, your fixed or variable. I mean, really, it depends on your situation, and it depends on your personal preference. Lots of people have, the big difference between, one of the big differences between fixed and variable can be the penalty. If you're looking at breaking that term early, typically the 5-year fixed, I'll use the 5-year for example, fixed term will have a little bit of a higher penalty to break that term. It's usually what's called an interest rate differential. It's basically the interest that you promised via that loan to the bank. They will collect that from you for your penalty. With a variable, the variable penalty to break is only 3 months interest, so substantially lower. But you do have to deal with the volatility of that variable rate going up and down. Some people that are looking at, maybe an option to sell the property early, maybe if they're unsure, they want that lower penalty option, so they take the variable rate instead. Some people really believe that the economy is going to lower rates substantially on the variable side. So as much as variable rates might be a little higher right now, they're going to correct over that 5-year term. So typically over history, variable rates are typically lower than 5-year fixed. So we're in a bit of a new situation where variable rates are higher. I still think that as inflation does start to yield here over the next year, especially over the next 5, that rates are going to normalize, and that variable rate is definitely going to drop. In a variable rate, as the economy kind of contracts back in and those rates improve, you would capture the rate as that rate went down if you're in a variable. If you're in a fixed, it would stay locked kind of where it's at for that 5-year term. So it really depends on your personal situation, on your risk tolerance, and where you believe that economy is going to go. Now, sometimes, watching rates is a bit like predicting the weather. If we had that crystal ball and I could say, hey, rates are going to be 3.2 in 16 months, then we would act accordingly. We don't know what those rates are going to do. They're dependent on a lot of factors, world economies, things like that. So it's kind of why we recommend, if you're in a riskier situation, we recommend the fixed rate. If you really believe that you want to be in more of a fluctuating interest rate and be able to ride that curve down as rates potentially do come down, the variable is probably your choice. But it's really a personal choice that we're going to give you the information on how to make that choice, but that choice is yours as a homeowner for sure.
Awesome. Yeah. And then we got another one here. Kind of insurance condo fees cover. So it's common insurance is what it's called. So the same idea. If there was like a flood or fire or something that happened to the main building, like if you're in like an apartment style condo and the building caught on fire for whatever reason, there's insurance for the main condo area, right? That's kind of the things that it covers. And each condo corporation has their own insurance that they have. So each one has, their whatever they have sorted out with their provider. It kind of goes by condo per condo basis. It just doesn't cover kind of your stuff. That's why you need to provide your own insurance for your own unit, right? So that covers if there's ever anything wrong with your unit, like a fire happens in that or water break or something like that, right? Where the insurance that you're paying and the condo fees cover just the main general areas, right? That's kind of why it's a common area maintenance and common insurance is what it's called. So that's what they would kind of essentially cover. I think that's all the questions we have. If anybody has any more questions, again, I'll stick around for a little longer. Feel free to throw it out. I'm going to put it in there one more time. if you haven't yet already and you want to see about getting this going, definitely book a call with us. We'll get you on the right track here. I think this question again, I believe, Ryan, did you cover the one that just came in here? I'm not sure about that one. That's a good one.
Is that what is the future of homeowners, buyers, statutory, original or Aboriginal or First Nation, whichever one agreed they are the owners of the land? That one?
Yeah, that one.
Really,
Yeah.
I mean, as I had kind of answered that one in the past, that's a great topic. It's one that's outside, of course, Andy and I and our purview. That is something that absolutely you should be taking up with your government representatives. It's a hot button topic. We do hear a lot of that. There's some great options that have come in from Métis grants, things like that, that do impact real estate and mortgages. But if you're looking at the future of where that land goes, unfortunately, that's going to be more of a government issue than, and Andy and I at a realtor or a mortgage broker level, please, I recommend taking that up with your local MLA, your government level. Great questions and great topics there as well.
Right. Yeah. And same with the rights over the land. So yeah, when you purchase a detached home, you are essentially buying the land that it is on. So that section that's parceled out is what you own. Yes, there are restrictions, obviously, with what's the word I'm trying to look for with that? Zoning bylaws and things like that, what you can and can't do with your land. But essentially, you own that parcel of it. It's in your name, but you still have to adhere to some bylaws and codes and things like that with what you do on it. But essentially, yes, if you're buying a condo and townhouse and things like that, then you're basically just buying the unit itself, and the land is owned by the condo corporation. So yeah, and the other part is I have had this before. I've probably sold one or two, but mobile homes is a lot different too. You're basically buying a mobile home, and that's what you're purchasing. You have to still rent the land that it is sitting on, which is usually in a trailer park or a mobile home park where you're renting the land from. But yeah, essentially, if you're buying a detached home, you're buying the parcel of land that it is sitting on. So if you decide to demo your house, you still own the land that is sitting there, the vacant lot. But again, I want to thank everybody who's still with us and participate. I really am hoping we answered a lot of questions for you. There is so much that goes into real estate. We just simply don't have the time to go over absolutely everything. But if you guys want to talk about literally anything, feel free to reach out to us again, book a call with us. Let us help you out some more any way we can. I really look forward, both Ryan and I do look forward to connecting with everyone here, and looking forward to working with you guys in the future or now or whenever it is you're ready to buy a home. I do appreciate everybody's time out of the day. It was a really great turnout for today. I wish everybody a happy new year. I'm glad. I hope everybody had great holidays. And yeah, I hope you guys kick off this new year with a bang, and hopefully we can find you guys your first home and start building you some equity, and welcome to being homeowners. It's a great feeling, and it's really, really good. You're not paying somebody else's mortgage, you're paying your own. You're building equity, get you in a starter home, some nice home that you can grow into, and then eventually we can get you into something bigger and better down the road. But yeah, I appreciate it so much. You guys have been awesome. Really, really great activity. I appreciate everyone again. I know Ryan's really great to work with, so yeah, book one with us. We'll get you in touch with Ryan too, and we'll help you guys all out. Yeah.
That sounds perfect, guys. Hopefully you're all going to click that link. We look forward to talking to every one of you, and yeah, we're looking forward to helping you all the way through that process. Thank you so much, and have a great night.
All right. We'll talk later, Ryan. Again, everybody, thanks a lot. I'm going to end it here, but you guys will be seeing the replay coming at you soon. The book link, the booking a call link, everything's going to be coming to you guys' inbox here in the next day or two here. So we'll see you guys around. I appreciate you sticking around, and have a great rest of your night. All right. See you guys.
Take care.